Welcome to the deep dive. This is where we take that pile of sources you've got, cut through all the market chatter, and pull out just the core insights you really need to get up to speed fast. Today, our mission is, well, it's pretty clear. Tackle this current market. It feels incredibly bipolar, maybe. We need to figure out what's actually driving things.
Bipolar is a good
Yeah.
word for it. And that feeling is exactly why the sources you sent over are so interesting this week. I mean, we're looking at a market caught in this real tug of war, right? There's genuine excitement about the tech, the innovation, but also just considerable anxiety. And a lot of that's driven by these shaky global macro conditions.
Yeah, the data's messy.
Total messy. You've
Yeah.
got the Fed doing that necessary targeted interest rate cut recently. So a little easing maybe, but they've also been super clear. They're staying cautious, kind of hawkish about future policy
Right.
and inflation. It's cooling, sure, but man, it's slow, frustratingly slow. So you mix that little bit of relief with this heavy ongoing uncertainty. It's just a perfect storm for risk assets, and crypto's right in the middle of that.
Exactly. And against that backdrop, that global economic tension, crypto isn't just about ledgers anymore, is it? It's really become what our sources are calling a battleground of narratives. This week, we're seeing these high-stakes fights playing out all at once. You've got DC politics clashing with innovation goals. You've got retail hype versus actual verifiable adoption happening.
Yeah.
And maybe the big one for anyone holding long-term, that constant battle between just short-term speculation and, real deep conviction.
Absolutely. And when you first look at the stories in the source material, they seem totally random, don't they? Like, how do you possibly connect a political dust-up in D.C. involving Coinbase
Right.
with Bitcoin literally showing up on your fast food tray? Burgers and fries earning Bitcoin. It sounds worlds apart.
Totally different universe.
Then you throw in these massive, billion-dollar institutional profits that immediately send ripples through the altcoin market.
Yep.
And top it all off, we have to stare down the frankly painful market failure of Uptober, a time that's usually bullish.
So that's the mission today. It feels ambitious, but we need to do it. We have to connect these four seemingly unrelated dots. Are these stories signs that crypto's finally, maybe, growing up, maturing into a real asset class, real financial plumbing? Or is this just more chaos? Four different flavors of the same old cycle.
The deep dive starts right now.
Okay, let's get into it. Story number one takes us straight into the political thicket. High-stakes DC stuff and that unavoidable regulatory friction you get when you try to operate in the mainstream. The sources are really focusing on this ongoing saga with Coinbase. They've been pulled, yet again, into some pretty significant political drama in Washington.
And this is crucial, I think, because it just confirms this massive shift. Crypto isn't some niche tech thing anymore, debated only by devs, right? It's now a central mainstream political issue. And it draws fire from, well, everywhere, all sides. That kind of attention, it's a sign of legitimacy, sure, but also real risk. Definitely risk. The specific flashpoint here, according to the sources, was a really sharp, very public back and forth involving U.S. Senator Chris Murphy. He went public with a pretty serious accusation against Coinbase. He alleged they were engaging in political favoritism. Specifically, the claim was that their donations, their lobbying, their whole political game was being strategically lined up with the former Donald Trump administration. So not just routine lobbying, but a perceived partisan tilt. That's potentially damaging.
Yeah, perceived is the key word there. And Coinbase couldn't just brush that off, obviously. They knew the risk to their image, their legitimacy.
Oh, they responded fast and sharp. The sources detail it well. Their counter was immediate, definitive. They flat out called the claim ridiculous, fundamentally untrue.
Strong language.
Very. Their official line, which they pushed out everywhere, is that all their political activity is strictly nonpartisan, period. They argue their only goal is to push for clear, common sense regulation that helps crypto innovation in the U.S. Doesn't matter who's in power. They want to be seen as fighting for fair rules for the tech, not as operatives picking a side.
And what's really interesting for us trying to analyze this is why Coinbase? Why are they always the lightning rod? Why do they keep catching all this political heat?
Good question.
Well, the sources really highlight how Coinbase is fundamentally different from most other big exchanges, especially globally. They're one of the very few major U.S. crypto firms that's both publicly traded.
Right, the transparency burden.
Exactly. Fiduciary duties, extreme transparency required. And they operate entirely out in the open, under the full glare of U.S. regulators. That visibility just makes them the easiest target, doesn't it? If you're a politician, a regulator, even media, and you want to make a point about crypto, who do you go after? The visible, public, US-based company, they're kind of the default corporate face of American crypto, whether they like it or not.
Okay, so let's step back from the DC noise for a second.
Yeah.
What does this fight actually mean for you, the listener, someone trying to make sense of the market? What's the real so what here for investors or even for Coinbase's own future?
Oh, the implications are huge because it hits market sentiment directly, and maybe more importantly, it hits their legislative leverage. You know that saying in crypto, perception is reality. It's practically gospel. So Washington's view of crypto, even if it's just a political jab for a press release, it can absolutely move markets just by injecting uncertainty. If big institutional money, which craves stability, or even just regular users start to see Coinbase as politically compromised, or if regulators start looking at them through a partisan lens, that could seriously impact future regulatory decisions. We're talking stablecoins, custody rules, trading regulations.
So the risk is basically that Congress stalls on passing those big regulatory bills Coinbase wants because they see the company pushing for them as, well, tainted.
Precisely. If that trust in Coinbase's neutrality gets eroded, they lose their seat at the table as a neutral, good faith actor. Think about it. This could mess with their ability to get federal banking charters down the line, maybe even hurt partnerships with traditional finance firms that have to stay strictly nonpartisan. The damage isn't just reputational, it could be structural. Really deep. So the core message Coinbase is hammering home, trying to send to everyone, regulators, investors, users, is, look, we're builders, we're innovators, we just want fair rules, we are not political players trying to rig the game. The integrity of that nonpartisan stance, it's absolutely critical, not just for them, but arguably for the whole industry's future in the US.
It really is a battle over controlling the narrative, isn't it? Who defines crypto's legitimacy in the eyes of power? Okay, now let's pivot hard. From the rarefied air of DC politics to something way more tangible and, frankly, a lot tastier. Let's talk about the American dinner plate. Right? We're shifting from complex lobbying chess games to, well, lunch and loyalty points. The source has picked up on a totally different kind of adoption story this week, but maybe just as vital. It's this new partnership between Fold Holdings, you know, the Bitcoin rewards platform, and the classic American fast food chain, Steak and Shake.
Yeah, this is a perfect example of that quiet grassroots stuff that often gets lost in the noise of price swings or political headlines. But long term, this kind of thing could be way more impactful than any DC skirmish. It's like a silent revolution, one burger at a time.
Let's get specific about the promo, because the mechanics are really key here.
Yeah.
The sources describe a new, pretty large-scale Bitcoin rewards campaign. The idea is super simple, which is why it's kind of brilliant. Customers buy a specific menu item, like a Bitcoin meal or the Bitcoin steak burger at participating spots, and they can earn a $5 reward.
$5.
$5. But here's the kicker. The reward is paid out in Bitcoin, or sats, technically, and it's instantly redeemable right through the Fold app's existing system.
And maybe we should quickly explain Fold for anyone listening who isn't familiar. Why are they the perfect partner for this? Fold is basically laser focused on Bitcoin rewards. They've really mastered the user experience, creating ways for people to earn sats back, tiny fractions of Bitcoin, Satoshis, just on everyday shopping.
Like cashback, but Bitcoin.
Exactly like cashback, but the reward is Bitcoin. So it turns something totally mundane, like buying a burger, into a chance to stack some sats. And crucially, you don't need any upfront investment. You don't take on any market risk yourself.
The mechanics seem incredibly smooth, which feels like the secret sauce for real mass adoption, doesn't it? And this isn't just some tiny pilot program either.
Right.
The promo's running across roughly 400 Steak and Shake restaurants in the U.S. That's serious scale.
Yeah.
Using it sounds frictionless, too. Either snap a picture of your receipt and upload it, or if you're already using Fold, just pay through the app and boom, Bitcoin reward claimed.
And the symbolism of the burger. I know it sounds silly, but it can't be overstated. Why is this little campaign so significant for mass adoption?
Because it perfectly connects regular consumers, everyday people, with crypto in a totally natural way. It basically makes the technology invisible.
You, the customer, you don't need to figure out how to set up some complex exchange account. You don't need to worry about private keys right away. You don't risk a penny of your own savings. You just bought dinner, and hey, now you own a little bit of Bitcoin, a sovereign asset, just like that.
It jumps right over that huge educational hurdle that slowed crypto down for, what, a decade plus?
Yeah.
But I got to ask the practical question. Can Steak and Shake actually afford to give away $5 in Bitcoin per burger? Are the unit economics sustainable, or is this just fancy marketing?
That's a fair tactical question, but it might not be about the unit economics of the burger itself.
Hmm.
Think about the unit economics of customer acquisition and loyalty. For Steak and Shake, that $5 reward, that's basically their customer acquisition cost, their CAC. And they clearly think it's worth it.
Ah.
It drives people to buy a specific promoted item, sure, but more importantly, it builds massive loyalty because the reward feels valuable, unique, maybe even a bit futuristic. And often that cost is shared or offset somehow by Fold's platform, the relationships with merchants. It's actually a pretty smart business play that frames crypto not as some scary investment, but as a really cool loyalty perk.
So the potential then is,
Yeah.
if other big brands, like household names, not just startups, see this working and copy the model,
Yeah.
the whole adoption curve could shift dramatically.
Precisely. This is exactly the kind of mass market hook crypto has always needed but struggled to find. It pulls Bitcoin out of the abstract, kind of risky investment bucket and puts it squarely into everyday life. Passive earning, daily consumption, the ripple effect could be massive. You shift the user base from just investors to millions of everyday users who are stacking sats just by living their lives.
Yeah.
That subtle cultural shift, that acceptance, it's incredibly powerful. Like the sources put it, Bitcoin in your burger might just be the first step. A first step towards real, widespread integration, culturally and financially.
That's a fantastic pivot. From fighting for legitimacy in D.C. to quietly getting crypto onto the American dinner plate. Okay, but let's connect this grassroots momentum back to the big leagues. Let's talk about the flow of serious institutional money. All right, changing gears again. Let's zoom into the institutional side of the crypto market. This is where the really big money moves, where traditional finance is figuring out its future strategy. We're talking about huge, verifiable institutional profits coming directly from holding Bitcoin.
Yeah, and this particular story is such a necessary counterweight, isn't it? It pushes back against the political uncertainty we talked about and also the retail nervousness from the market dip. It shows that, look, despite the macro headwinds, the conviction among these big, sophisticated corporate players is still incredibly strong. And crucially, it's proving profitable.
We really have to spotlight the massive financial win reported by this major Bitcoin treasury firm. Let's call it Strategy Corporation. They were the pioneers, right? The first big public company to go all in, putting most of their corporate treasury into Bitcoin. Well, they just posted a profit of, get this, $2.8 billion for Q3 2025.
Wow.
That's not just a big number. That's a headline that echoes through every corporate boardroom on the planet.
It is absolutely staggering, and the sources break down where that gain came from pretty clearly. Mostly, yeah, Bitcoin's price going up, but also combined with some pretty advanced, sophisticated balance sheet management, basically leveraging their Bitcoin stack smartly and responsibly. But the real story here, the reason the whole market snapped to attention instantly, isn't just the dollar amount. It's what we could call the legitimization effect.
Okay, break that down. How does one company's profit actually change how others behave? What's the mechanism?
Well, think about it. When a company like Strategy Corporation Public, accountable to shareholders, highly visible, announces $2.8 billion in profit, mostly from holding Bitcoin, that sends a massive, undeniable signal. It validates the whole strategy. This isn't just lucky trading. It's proof that Bitcoin can work as a viable, high-growth, long-term treasury reserve asset, that it protects value and generates returns potentially better than just holding cash.
Right.
So when that big money succeeds and does so publicly, it legitimizes the entire asset class. For everyone. For conservative hedge funds, for cautious corporate boards who've been sitting on the fence. It makes it much harder to ignore.
And we know what happens next in crypto. Institutional validation triggers that almost Pavlovian response from the speculators, doesn't it?
It does, but there's a logic to it. This kind of institutional success immediately gets traders and speculators thinking, okay, who's next? Where's the next big win in this ecosystem? They assume that where the big institutions put their money first, retail and maybe secondary institutional waves will follow. And that leads us straight to the altcoin ripple. The sources noted that attention immediately snapped towards infrastructure projects, the underlying tech that supports the Bitcoin ecosystem. Things like Bitcoin Hyper were specifically mentioned.
And there were actual numbers tied to that ripple effect.
Right, there were. The sources specifically mentioned that Bitcoin Hyper's pre-sale, which was already running, reportedly jumped past $25 million in funding right after Strategy Corp's profit announcement. It was directly fueled by this wave of bullish feeling coming from the institutional validation. You really need to understand this pattern. Big success in Bitcoin treasury models drives speculative money into the riskier, potentially higher reward parts of the crypto market.
And this dynamic, this pattern institutional wins in BTC, leading to huge speculative flows into promising or, let's be honest, sometimes just hyped up altcoins. It's basically powered every major crypto bull run since 2017, hasn't it?
That's absolutely right. What traders are doing is making a high beta bet, essentially. They're betting that if Bitcoin keeps climbing, keeps getting adopted as a treasury asset, then all the plumbing around it, layer 2s, DeFi tools, cross-chain bridges, all that infrastructure is going to grow in value exponentially. So they're basically buying the picks and shovels for the next phase of institutional gold rush.
Okay, but we absolutely have to include the standard warning label that comes with any altcoin boom like this. While the excitement around projects like Bitcoin Hyper is real and probably needed for development, the sources correctly remind us. These surges are packed with both enormous hype and massive speculation.
Critical distinction.
Some of these infrastructure projects will probably grow into major platforms, sure, but others, they'll just vanish when the market mood changes or the next shiny object appears. It really forces you, the listener, to think critically. Which projects are actually building something useful long-term and which are just surfing the current waves driven by institutional news?
Yeah, it's that messy place where real building meets pure speculative mania. It's maturity mixed with frenzy. But even with all this institutional money flowing and altcoins popping, the overall market hasn't exactly been throwing a party, has it? Let's transition now to that cold dose of reality that's kind of sobered everyone up.
Yeah, let's definitely tackle the elephant in the room, the thing that's soured the mood for pretty much all retail folks and momentum traders lately. The overall market performance this past month, we have to talk about Uptober, or rather the failure of Uptober.
Oh man, it was a brutal letdown for so many people. For years, right, October had this nickname, Uptober, because there was this really clear historical pattern. Bitcoin and most major alts tended to stage pretty big rallies right after the summer lull. It was almost like a seasonal guarantee, a psychological boost you could count on.
Almost. But the analysis in our sources paints a very different picture for October 2025. It's shaping up to be one of the worst Octobers in over a decade. That early month optimism just completely evaporated. Turned into cautious selling, steady downward pressure, Bitcoin prices just slid, Ethereum followed, and yeah, most major altcoins are deep in the red if you look at the month-over-month numbers.
So, okay, why? We need to unpack the reasons for this really sharp slide. Because it wasn't just one bad day or one piece of news. It was a mix of things, all hitting at once and tied deeply into the global financial system. The sources point to three main culprits, and they all feed into each other.
All right, number one, the big one, the macro picture.
Correct. Even with that small rate cut we talked about earlier, the Fed's overall message was still cautious about future cuts. And crucially, they're still committed to fighting that sticky inflation. That spooked all global risk assets. When the risk-free rate, what you can earn on safe stuff like government bonds, starts looking attractive compared to potential gains from speculative assets, capital always shifts towards safety. It just does.
Makes sense.
We saw crypto really tracking closely with growth stocks, with tech stocks, things that get hit hard by rising bond yields. This macro pressure just made investors hesitant to put fresh money into volatile assets like crypto.
Okay, factor number two, losing momentum at really key technical price levels.
This is where that big number, $100,000 for Bitcoin, comes into play. Leading into October, there was huge hope, huge anticipation that Bitcoin would finally test and maybe even hold above that massive psychological level. The market had a strong summer, momentum was building towards $100, but then the press stalled out. It couldn't even hold the approaches to that line heading into October.
He sold out.
Exactly. And that's when we saw a major profit-taking tick in, especially from short-term traders. That triggered more selling, hit the momentum guys hard, caused a cascade of liquidations, and basically broke the psychology of the summer rally. It confirmed October wasn't happening this year.
And then number three, just a general drain on confidence, fueled by stuff happening inside the crypto world itself.
Yeah, this is where our earlier stories loop back in, right? The market's wrestling with this ongoing mix of internal friction, like that Coinbase political drama, which clouds the regulatory picture, plus these persistent worries about the global economy. That kind of environment, it doesn't exactly encourage people to deploy new capital passively. It makes existing holders just sit on their hands, wait for clearer signals. And that lack of buying pressure just makes any downward move much sharper, much more volatile.
And the psychological hit from a failed Uptober.
Mm-hmm.
You can't just brush that off in a market like crypto, can you?
No, not at all. Crypto is so driven by sentiment, by narratives. People call it a narrative economy for a reason. When a strong, expected seasonal story like Uptober breaks down so badly, it triggers a real emotional pullback, especially among retail investors, the so-called weak hands. They get scared, they sell. That reduces liquidity, which causes bigger price swings, which scares more people.
Vicious cycle.
Exactly, a vicious cycle of evaporating optimism. We saw it play out perfectly through the middle of October.
But okay, there is another side to this coin. We should explore the potential upside, the counter-narrative that some analysts are starting to float. This downturn isn't just pain. It could be seen as, like, necessary market hygiene.
Absolutely. Downturns suck, they're painful, no doubt, but they do perform a really vital service for the long-term health of the market. They reset leverage. What that means, basically, is all those super confident speculative bets made by traders using borrowed money margin trading, they get wiped out. Forced liquidations happen when the market drops.
Cleans house.
It cleans house. It's dramatic, yeah, but it flushes out all that excessive risk, gets rid of the fragile capital that would break at the first sign of trouble, and it creates much cleaner, healthier market conditions. So analysts are starting to frame this recent slide as maybe the quiet before the storm. The thinking is, if Bitcoin can just find its footing, stabilize above some key support levels now, this cleaner foundation, without all that crazy leverage, could be exactly what's needed for the next real bull run to start on solid ground, without the risk of just collapsing again immediately. So, yeah, painful, but maybe necessary prep for real sustainable growth later.
Okay. So we've journeyed through DC power plays, the surprising power of the dinner plate, billion-dollar corporate wins, and the cold market slapdown. Let's try and pull all these very different threads together now. What does it all tell us about where crypto actually stands in terms of maturity? This has been quite the deep dive. We've bounced between headlines that seem like they belong in totally different worlds. So what do Washington politics, burgers, strategy corporations, massive profits, and a failed Uptober really have in common?
I think what they have in common is that they all paint a picture of a crypto ecosystem that's stuck right in the middle of a really complex, kind of painful, but ultimately unavoidable transition. It feels chaotic, absolutely. But maybe it's the kind of chaos you expect during the process of maturing, of integrating into the mainstream financial world.
Okay, let's break down that paradox. Let's look at the evidence we've discussed. On one side, you've got undeniable signs of mainstream legitimacy, right? You have Coinbase, a huge public financial company, fighting tooth and nail to defend its integrity in the political arena. That alone confirms crypto isn't hiding anymore. It's a fundamental part of mainstream American politics and finance now.
Totally. And then in stark contrast to that high-profile political battle, you have this quiet, almost invisible cultural adoption happening at the dinner table. Fold and Stake and Shake are just slipping Bitcoin adoption into everyday life via loyalty rewards. That's adoption that needs zero financial investment, zero tech savviness from the user. It's cultural acceptance bubbling up from the bottom, making the tech disappear and the reward feel real.
And third, the money engine is still running. Those huge institutional profits from Strategy Corp and the fact that altcoins like Bitcoin Hyper can still pull in $25 million in pre-sales right after. That confirms institutional and speculative money is still flowing. Maybe more selectively now, maybe a bit more cautiously after the market jitters, sure. But the capital engine is definitely still running, and it's hunting for those infrastructure plays.
And if you zoom out even further, connect this to the bigger multi-year trend, it becomes super clear. Crypto today is sitting right at this fascinating intersection. It's where regulation, culture, and macroeconomics are all colliding. You've got governments all over the world actively trying to figure out rules for stablecoins, tokenized assets, AI tokens, cross-border payments, the whole shebang. That Wild West era of regulatory ambiguity. It's ending fast, even if the legislative process is messy.
And the big corporations are finally moving too, right?
Oh.
Not just watching anymore.
Absolutely. Traditional giants, MasterCard, PayPal, now even fast food chains, they're not just observing crypto anymore. They're actively experimenting with blockchain incentives. Why? Because they're starting to see real utility, not just hype or speculation. And users themselves are changing how they see it. Maybe less as just a get-rich-quick gamble and more as a genuine alternative financial network, a way to maybe passively build some sovereign wealth outside the old banking system.
So when you put it all together, all these chaotic, sometimes contradictory pieces, the DC fights, the burger rewards, the corporate billions, the market dip, what's the inescapable takeaway?
I think the takeaway is that the underlying current, the deep tide of adoption and integration, it's actually way stronger and more persistent than the noisy short-term price waves suggest. Crypto is embedding itself into the fabric of everyday life, into institutional strategy. It's happening through profit, through payments, yeah, even through political controversy. It's messy, definitely. Volatile, absolutely. But every single one of these stories, even the tough ones like failed rallies or political spats, they actually signify real structural progress towards broader integration.
And that brings us to the end of this week's deep dive. We pulled out some major insights, haven't we? From the high-stakes game of defending legitimacy in Washington, all the way down to the simple, maybe profound act of earning Bitcoin with your fast food order. Hopefully you feel much better informed now about the key forces, political, institutional, consumer, that are really shaping this space right now.
And as Uptober wraps up and we head into November, here are the crucial questions we think you should keep an eye on. Because the story now feels less about just the raw price ticker and more about maybe perception, participation, and persistence.
Okay, first, the big technical and macro question. Now that the markets maybe reset some of that leverage, can Bitcoin stabilize above that huge psychological $100,000 level in November? Or will those macro pressures keep pushing it down, maybe signaling a longer crypto winter? That $100 K-line feels like the real battleground now.
Second, back to politics. Can Coinbase manage to distance itself from this latest wave of political drama? Can they successfully rebuild that image of being just a neutral advocate for innovation and fair rules?
Yeah.
Because their perceived neutrality really matters for influencing future legislation.
Third, adoption. Will other big mainstream brands look at what Steak and Shake and Fold are doing and think, hey, maybe we should try that? Will we see Bitcoin rewards pop up in more major loyalty programs? That kind of widespread corporate move would be a huge tipping point for real consumer involvement.
And finally, capital flows. Will those confirmed multi-billion-dollar profits from Strategy, Core, and others be enough to keep the positive sentiment going in the altcoin space into the new year? Will it allow those potentially crucial infrastructure projects like Bitcoin Hyper to keep raising funds and actually build out the foundations needed for the next wave?
Lots to watch. The story's definitely getting deeper, the integration's picking up speed, and the narrative is way bigger than just charts and numbers now.
Which leads us perfectly into our final provocative thought for you this week. Just mull this over. Every single time someone earns a little bit of Bitcoin buying a burger. Every time a public company reports billions in crypto profits on its balance sheet. And yes, even every time a top regulator gets into a heated argument about fair crypto policy, Bitcoin's story gets thicker. It gets more deeply woven into the fabric of the real world. So yeah, Uptober might have fizzled rally-wise, but the underlying foundation, the actual adoption, the institutional integration, that might just be stronger and more resilient than ever before. It's growing deep roots, maybe, not just fragile wings.
Thank you for diving deep with us today. We'll be back next time, ready to cut through the noise and deliver the essential signal.